let me repeat, okay? Never mix all your expenses to liability, okay? Because sometimes when your company incurred some expenses, for the expenses for sure, something must be there. However, not necessary to liability. Sometimes affect your assets. All right. And let me see. The number 28. Number 28 is the total liability and shareholder equity. So there is liability and shareholder starting from 22. Capital stock. Capital stock. And we will save the issue preferred stock, common stock issue later on. We'll save the issue paying capital. Retain earning. Oh, let me ask you. What's the difference between 23 and 24? 23 is called pay in, and 24 is retain earning.
Once you get into capital, you can take it back and distribute it.
Not quite close. What's the major difference between 23 and 24?
Retain means the net income from last period
good.
to this year.
Very good.
And
So this is the same thing here.
Yeah.
Same thing here. Same thing. I just said, right? He posts these questions, right? Yes. For every year, the accounting people gonna close out the income statement and post this net profit or net loss to equity, and that is return earning. So return earning is the money earned by your company, and paying money is paid by shareholder. Understand? So that is the major difference. And also there is the law for the from the tax. Everybody know C corporation or say regular corporation, we say it's double tax. Everybody heard about it, right? Corporation is double tax. What does it mean? Because by itself, 1120, this is the number of the form. When your company file 1120 and the bottom line come out with a positive, then your company pay corporate income tax one time already. All right? After your corporate pay corporate income tax, still there is profit. That is called after tax profit. Then your company can make a decision, would I to hold this net profit after tax, everything at a corporate, or your board member can make a decision to announce dividend. We will talk about the dividend in one chapter. So for example, the company like Apple, you don't see Apple announce dividend too much. Anybody know why? What is the major factor for company to give dividend or not? And you are the shareholder. If you are the shareholder of one certain corporation, not necessary, you want to receive the dividend. Let me narrow down my questions. If you are shareholder, why you don't want to receive dividend from your corporation? Why? What's the reason why?
Get more money to the corporation to run for next business.
This is one reason. Another reason why you don't want to receive dividend?
Tax.
Tax. When you receive dividend, you need to pay tax. Yeah, I will go back to your issue. Your issue is very legitimate. Even if that's the most important issue. However, for the secondary issue is you don't want to pay tax. Say, let me give you one example. Okay, very funny thing. Very funny. They're related to my next semester. I try to promote my next semester very much. Okay. What's the difference between LLC and a corporation? There is a big major difference, because if you invest in corporation, say for example, you spend, I don't know, right now, $400 for Apple. How much? I did not follow up.
586.
600.
580.
Okay, this is 600. You just pay $600 to Apple, and only one share, okay? Only get one share, and by the end of the year, you receive, I don't know, $5, for example. You pay 600, you receive 5, and this $5 not even cover your cost. You understand? You pay 600, get one single share, and suddenly you receive $5. $5 not even can cover you, I don't know, 1%, 0.05% of your cost. And you pay tax. This is corporation. But for LLC or for partnership, every dollar you receive from LLC or from partnership, if not exceed your cost, your capital, you don't pay any tax. That is the major difference between corporation and LLC. But I will leave that alone in next semester. But let's go back to your issue. Her issue is more legitimate because if the company can make bigger return, we are talking about ROE. ROE means return of equity. We are talking about that issue. And the reason why Apple is so successful, Apple is not alone. Apple, if Apple becomes a country, everybody know, the value is like 11 or 10, top 10 or top 11 country in the whole world. If we talk about the market value, how amazing. So to determine if one business is successful or not, to determine any business is attractive or not, that depends on ROE, return of equity. Return of equity. So the reason why it's so simple, when people put in $600 on Apple stock, the ROE is bigger than almost any other thing. Well, based on the current information, by the way, okay? Because for financial business, you all understand, right? No any history may guarantee the future, but usually financial advisor never tell you. Financial advice only tell you the history, only prove you the number in the past, but they should give you the full no. Every number I submit to you will not guarantee in the future, all right? So the reason why the company does not give you dividend, however, the stocks they're going up because the ROE is higher than any other thing. So you don't want to get money out, right? Because each money, each penny you keep in this company, you will receive much higher return. So what's the reason why you want to get money out? So there's no, I don't see anybody gonna complain, say Apple does not announce dividend. Nobody complain because ROE is much higher.